So we just learned about 4 new stocks that Berkshire Hathaway and Warren Buffett have bought this year, and it could tell us a little bit about what they think the future holds, but also could give us some ideas for maybe adding some stocks to our portfolio. So according to Benzinga, basically they have $1.8 billion invested in key industries, which includes a few stocks like Nucor, D.R. Horton, and Lennar. Also, we have reports that they bought United Healthcare stock this year as well, which is a pretty controversial one we'll get to in a second. According to Benzinga, this could be a sign that betting on housing and infrastructure hints at plans for economic turbulence, or maybe that's what he's predicting is coming, which obviously it's been a kind of a controversial year. So let's look at some of these stocks that Warren Buffett's been buying this year. So Nucor is the first one. They are up 1.56% in the past 6 months. Year to date, 26.35%. The past year, almost breaking even, just kind of staying around where it's at. Past 5 years, pretty good, up 223.67%. And I also like to look at the last 3 months. So if you look at the last 3 months, which is basically a quarter of the year, they're up 26.45%, showing some positive signs here. Now, if you compare that to the S&P 500, the S&P 500 is up 5.21% in the past 6 months. Year to date, 9.89%. Past year, about 15%. In the past 5 years, about 90%. So many companies this year obviously had kind of almost like a V shape in their chart because of when all of this stuff started in the spring, around March and April of this year, about all the tariffs that were coming. A lot of people freaked out and sold the market. So obviously it's gone back up to like all-time highs for the market in general. And so a lot of companies, you will see a very similar chart, although some of them are better than others. But over the past year, they're only up 0.4%. And if you look over the past 5 years, even though they're up 223% or so over the past 5 years, you can kind of see a lack of major progress here. So if let's say you bought in 2022 instead of 2020, and you're looking at, well, if you bought in 2022, it's not up that much, maybe just a little bit. If you bought in 2023, you basically have broken even. You aren't really making anything off of it over the past 2.5 years. Now, obviously, that doesn't mean it'll continue that way, but it's just something to keep in mind that the progress has not been a steady rise for the last few years. As far as what Nucor does, the positive thing about them that's really interesting is they do kind of go with the current administration's policies of America First and all of that stuff. So whether you agree with it or not, that's not what this video is about. They are making tariffs on steel, for instance. They have a steel tariff that is going into effect. It's about 50% on most countries. And so if you look at, Nucor is an American company. They're based in Charlotte, North Carolina, and they are a producer of steel and related products. They also happen to be the largest steel producer in the United States and the largest recycler of scrap in North America. So if you look at steel, you look at, let's say, the next 4 years of this administration, we don't know what's going to happen after that as far as tariffs, but if this tariff on steel stays in effect, then it greatly helps Nucor and gives them a leg up on the competition for steel in the United States. It could lead to some more growth and maybe even new all-time highs. You also get a pretty nice little dividend out of them right now. 1.52% is not too bad. It's not usually as high as some of the others that you might want to retire on, but it's pretty good. It's a pretty solid idea of you might get some growth because of the tariffs, and you might be able to just collect on that 1.52% dividend yield. So another one that Warren Buffett and Berkshire Hathaway have bought this year is D.R. Horton. D.R. Horton is one of the biggest home construction companies in the United States. So another kind of bet on home and infrastructure by Warren Buffett and Berkshire Hathaway. Over the past 5 years, up about 115%, outpacing the S&P 500, as you can see there. If you look over the past year, not great, down almost 9%. Year to date, though, up 20%. There are signs of life here, as you can see, kind of an upward swing. And then if you look at the past 6 months, they're up 27%. And if you look over the past quarter, it's looking pretty good at up 34%. Now, if you look at their quarterly financials here, they're not looking too great right now year over year if you're going by Q2. Everything is down across the board. But of course, a lot of Warren Buffett's moves are long-term moves. They're not something that he plans on selling anytime soon. You also have United Healthcare. This is a very controversial one because they've gone through a lot of turbulence over the last couple of years. And if you look at the past 5 years, they're down 1.8% over the past year, down 46.7%. Year to date, down 38.85%. The past 6 months, down 38%. And if you look at the past 3 months, they're only up 1.24%. They haven't shown a lot of big signs of life, although they did have a pretty recent spike after the news broke that Warren Buffett and Berkshire Hathaway had a stake in United Health Group and that they bought into it this year. They jumped 21% in the past 5 days. Now, obviously, their CEO was killed in 2024. It's a big deal all over the news. And if you look at what happened after that, so that was in 2024. So if you look at their chart here, if you look at over the past 5 years, 2024, that was the very end of 2024. So you're looking at, there's a pretty big dip after that happened. They were up to around, $615, and then they dipped down to around $500 after that happened. But then after that happened to their CEO, they also had a bunch of issues in 2025 due to unexpectedly high medical costs in its Medicare Advantage business. They had a surprise CEO exit, which was the CEO that took over after the death of the previous one, and a withdrawal of its 2025 earnings outlook and federal investigations into alleged Medicare fraud and potential misconduct. So, all of that being said, apparently Warren Buffett thinks they're going to make a comeback, but you might be kind of selling your soul by investing in them and hoping for that. Because if you buy stock in a company, you're hoping that they do well. And if all of this stuff is actually true, you might have to think about that. Obviously, everybody's different, but it's one of those things. A lot of businesses obviously have shady things going on that we probably have no idea about. But obviously, a lot of this has been coming to light in the past year, and so it just remains to be seen if United Health Group is going to actually have to pay for these issues legally. So yes, it could. Some people were saying, oh, well, United Health is a bargain right now because they went down to like 237 when they were up at 615, and if they even just got close to their all-time high again, you could double your money. But again, a lot of issues that still need to be sorted out right now. And although they do have a very attractive dividend yield of 2.83%, a lot of their numbers, even though they had a nice spike from the news of Warren Buffett buying them, that doesn't mean they're going to continue rising, because before that news, things were not going very well. And then you also have Lennar Corp Class A. So over the past 5 years, it's up 78.91%, which is not quite as good as the S&P 500, but not that much worse. Over the past year, down 19%, not great there. Year to date, only up 5.67%. Last 6 months, 7.29%. And then over the past 3 months, some signs of life here, up 20.2%, which is not too bad. So Lennar it's kind of similar. If you like D.R. Horton, there's a good chance you might be interested in Lennar Corporation. They are an American home construction company based out of Florida, and they are, as of 2023, the second largest home construction company in the United States based on the number of homes sold. So they believe that betting on housing seems to be a good idea right now, apparently, with D.R. Horton and Lennar. Maybe a decent dividend stock at 1.52%. The PE ratio is very low. Notice that the PE ratio is pretty low on all of these right now, other than maybe Nucor, which is at a 26, but the rest of them are below 20. Of course, Lennar, another one that's quarterly financials are not looking very good. If you look at Q2 year over year, they're down all across the board. Net income, diluted EPS, and net profit margin are down more than 40% year over year. And as far as the earnings call, they missed on EPS and beat on revenue. So as the article said, they seem to be betting more on housing and infrastructure. And there may be signs that they're worried about economic conditions going forward because of this. Maybe they're taking the safer route with stocks right now. But then again, Buffett tends to take more of a safe route in a long-term outlook on stocks in general. So obviously I'd have to do a full deep dive into each one of these before I can even say whether or not I would want to follow suit on any of these stocks. Right now, I would say Nucor might be the most interesting just because you at least have a major government deal with the 50% steel tariffs that could greatly benefit them and give them a leg up on their competition because there may be less importing for outside sources of steel, at least for the next 4 years while Trump is in office and these tariffs are in effect.